What's up, guys? Crypto Jack here. Happy to bring you another video where I go over 4 things we're going to watch for in 2023. And one of them we're going to be watching right away, January 1st. And it's something we have not been able to look at. Let's get straight into it. Hope you enjoy the video. All right, guys, first things first, we're going to talk about pivots. Now, before I show you what it's going to look like in 2023, I need to give you a little bit of background just to explain why we should care so much about this and why it's my number one. So pivots are an indicator that are based off of math, and they give you a 12-month outlook, and they can provide things like the resistance, the actual pivot level itself, and the first level of support. Now, this is a particular indicator that I use. My settings that I have are for Woody. There's lots of options, but I back tested this. It's worked pretty good. Woody. Time frame is yearly, although many people do things like weekly, monthly, quarterly. That's fine too. And 15 back. Now let's get into why this is so important to me. The pivots, when they show up, are heavily respected by the market. Now remember, when a pivot first is applied to a year, so back here, this is the year 2014. This pivot, these lines came onto the chart. Let me turn this off just to let you know. This little point right here came on January 1st of 2014 and extended all the way out. This is not going back and altering what is being shown based on the price action through the year. This showed up on the chart January 1st of each year. And then if I turn the price back on, you can see how important this particular price action was with respect to the market. So this is back in 2014. We see that while this is not perfect in like, you know, the end all be all that you should just go all in or net, you know, 100% short. It is very important to consider when you're looking at multiple things. So right here, you know, this level was tested multiple times. The bear market low, this is the S1. This is the first support. The bear market low got within what, $10, $15 of that low. So this wick got within 10, $15. So, you know, if you had your bear market bottom somewhere penciled in down in this region, yeah, you would have probably bought the Pico low of the 2015, you know, 2014 into 2015 bear market. Now moving forward, as this broke out of accumulation, we'll come back, talk about that in a little bit. As this breaks out of accumulation, what is the level that's so important? Well, it is this pivot level at about $500. Even the extension was you know, if you extend it out, even though this closed out in this year, I like to keep my eye on what happens even back here at the bear market low, and this part right here. I like seeing what happens when price bangs its head against a level, breaks out, retests, and off we go. This was the start of a really nice bull trend. Obviously, this is the 2017 bull run where everything goes up to $20,000. Now let's look at the subsequent price action after the 20K peak. Back in here, this doesn't look like a whole lot, but these are 3-day candles, okay? So the price came down, broke below, touched. This is multiple touches where this pivot, immediately after the parabolic high, the pivot acted as a sort of sell-off point. This is where everyone went 100x short to the downside, right? This is where people piled on their shorts, but it came back and it spent multiple days there. I would say that's about a month's worth of touches. And every time this touched, this was people selling and or layering in their shorts, which is very interesting to me. Now, moving on to the first support. Remember the last bear market, the S1 was super important to us, right? Here is the next S1, the following bear market. So this is, you know, where price went from 20K all the way down to 3K and change. But once again, we have this horizontal, this extension. What happened as soon as price broke out? Well, it went, you know, straight to the measured point, this R1, this first resistance. And again, we could kind of spend a lot of time talking about this, how this consolidated above and below, ultimately breaking down, you know, where did this downtrend ultimately come to a rest during this period? Well, it was the pivot itself. So we have example after example of the S1, the R1, or the first support, the first resistance, and the pivot itself being super, super crucial to price action. And I want to see more recently what has happened here. Well, let's look at the first resistance. Look at how price just spent all this time above and below, all these little bounces, all this, it's almost like a midline in a channel, right? But this was the first resistance. Well, during this downtrend of 2022, remember this redistribution that we watched that you know, this channel and the Wyckoff guys, we were on some of the only people ever, like across the whole board, we were some of the only people to see and know to kind of pucker up that this was a bearish thing. This is redistribution. This is not a time to go long. This is time to be fearful, or at least like hesitant and dial back the margin usage. And a lot of people call this a bear flag, and I think either one is appropriate. But in any event, look at what happened here. Look at how this is the pivot level. Again, let me turn off the price so you can see it. This is the pivot level. This came out on January 1st, 2022. You know, at the time, price was effectively there, consolidated back up to it, dropped. Look at where the first drop came to a head. Look at where the support turned into resistance. Once again, the S1. So these levels are super important. So hopefully, you get the idea, you get the point here that the pivots are extremely powerful on the macro, on the broad base of looking at things from a high perspective here. So again, I am super interested to see what is going to happen on January 1st. Today is the 26th. So, you know, we're only 5 days away or so, and then we'll get the next calculations, the next levels. I suspect the pivot itself would be somewhere down in the 30s. I can calculate it myself. I mean, it would just be less 5 days, but I kind of like the suspense. It's kind of like a you know, it's just a fun thing for me to do. I'm not trying to get ahead of the market. I'm not trying to front run anybody. I just want to see what happens. I think it'd be very interesting to see what happens and where the pivot, the S1 and the R1 all show up. Number 2 is key chart patterns. So key chart patterns. First things first, Wyckoff accumulation. Why do we care about Wyckoff accumulation? Because potentially Bitcoin might start forming a like at least fleshing out more a really clear Wyckoff accumulation. Wyckoff accumulation, for those of you who don't know, is the bottoming of bottom signs. This is a multi-month or multi-year setup, and oftentimes you have a trade range where price effectively goes sideways. It runs the lows, runs to the highs, consolidates, and goes. Now, right here, this is an example of the last time we saw this happen clearly for Bitcoin. This is the 2015 bear market. We see a run of the lows to 200, you know, really nice sideways trade action. Anybody who had a diagonal would see that these were all broken. Any kind of diagonal you could have, they all got broken after the spring and rally up into the sign of strength. The sign of strength is this last little period of consolidation before the next trend. And this is all fascinating to me. I love Wyckoff stuff. We saw the same thing the following bear market. So in 2019 into 2020 for Ethereum. Ethereum painted the same thing. This is right when I started streaming, and we 100% caught this move. And I was very vocal about, you know, if this is what I think it is, then $300 Ethereum is the last you're going to see until potentially the next bear market. The only thing that this really shows is that the biggest boys in the room, the guys with true wealth, are loaded up, and this thing's going to go up. This does not tell us what's going to happen in the next bear market or you know, too far in the future. All this tells us is the big boys loaded up. Get ready. This is a multi-year, multi-month trend, and this is going to blow to the upside significantly. Now, why we're talking about this right now is because here is the live view of Bitcoin. Now, you can see there is an argument to be made that coming down from the $70,000 high to the current price of, you know, $16,000 to $17,000 is a substantial drop, which is the first thing you need for a Wyckoff setup. Number 2, you need a multi-month or multi-year period of sideways. We have entered this range somewhere around June, and we've gone sideways since then. That's 6 months. So item number 3 is you run the lows, rally back into the trade range, rally to the highs, consolidate, and off we go. So we are missing 2 big components, and this is why I'm putting it out in front of everybody's view, because I think it is worth us all paying attention to. I'm not saying that this is activated. This is not a live setup yet. It's not, but it is something we need to keep our eyes on, because should this should this, the boxes start being checked, we need to be very quick and swift to act. Whether that means closing your shorts, or perhaps that means opening new longs, or if you sold back at 70K, you were like the god tier trader, then now's the time to re-enter in and look to the upside for the most likely path of continuation. So the two things that we need to see: number one, a close back in the trade range. This would be north of 18.3 or so. I put these lines out so that you could see. So this is about, the range low is about 18,300. The range highs, so that was number one, it's closing above 18.3. Number two is going above the trade range and consolidating for an extended period of time. Maybe that's a month, maybe that's 3 months. We've kind of seen it all with the back testing of Wyckoff accumulation, but this does tend to happen a lot. So it would be very interesting to see a big explosive move up to 30K and then maybe 2 or 3, 4, 5 months of just sideways. Sure. Until we rocket up into the start of the next bull market. I would love to see all that transpire. But the second, I was saying, number one is a break above 18.3. Item number two is consolidating above the range highs, which would be north of 25,300. You call it 25K. 25K. So north of 18K, north of 25K. These are the kind of the two big areas that I'm watching. And then I'll get real excited because the implications are a new all-time high. Like, that's the takeaway. If we can argue Wyckoff is happening, then we're looking at potential new all-time highs. Another target, so this is still the key macro targets I'm watching for. We are currently in, arguably, a falling wedge. Falling wedges are very, very interesting patterns because when they move very quickly. The saying is, it's like somebody screaming fire in a crowded theater and everybody runs for the exits. If this should start breaking down or breaking up, look for the moves to happen very swiftly. Now, think back what I was saying about these moves to the upside, these moves to the swing highs back with Wyckoff. These things will look very similar. If it breaks up in this manner, I would expect it to go very quickly. Anybody who was shorting or potentially moved to the sideline, they're all trying to pile back in. But the opposite is true as well. Anytime I've seen these patterns break to the downside, it's been very swift and very brutal. Anybody who had a margin long, anybody who was piling in with new capital, they're now having their stops run, they're exiting their positions, and they're leaving. Now, I have put on this chart the targets themselves. So we have up to the upside, we have an initial target of about 25K. This is oftentimes where a falling wedge will come back and hit, and it's the highest point within the falling wedge, and that's right at 25K. So this would be your first stop, your first destination on a breakout. The second target would be the macro resistance at 30K. Again, if you zoomed out, 30K is a very important number, going back for the last couple of years. If you remember back in 2021, the bull market, where the bear market kind of bottomed in 2021 and then rallied, DeFi summer, people called it, all that kind of stuff. That rally took place at 30K. So 30K has been a really important level of battling between the bulls and bears. So these are my two levels, 25 and 30K to the upside. To the downside, should this decide to break down, should the market be unable to break to the upside, the downside targets are measured two ways. One, the 1.618 extension, which is from the range high to the range lows extended downward. That's right around 97.50. It annoys me how that number works. Let's just call it 10K. So 10K as a nice round number target as the 1.618 extension to the downside. And then there's the measured move. Measured move right here is at about 5,250. So let's call it 5K. So you have about 10K, you have about 5K. These are your downside targets, about $5,000 difference. The third thing that I want you guys to keep your eye on is the Ichimoku Cloud on the daily. Now, you got to be sure to use the settings made famous by Josh Olszewicz, Carpe Noctem on Twitter. He used what we call what he refers to as the doubled settings. And this has conversion line of 20, baseline of 60, lagging span of 120, displacement of 30. Okay, so these are the settings for you to adjust things so you can make it look just like mine. Now, what's very cool about this is this back tests very, very well. I'm just going to show you one little area and then, how it's played out forward and then we'll go from there. But let's go back to the bull run going from $200 to $20,000. And I want to show you how well this played out and how interesting this is. Now, how this works is there's two moving averages that are kind of playing with each other. They're crossing, they're recrossing, they're moving up. And what you look for is for the fast moving average to cross above the slow moving average. So let's say we just started looking at the chart right around this moment that I circled. We don't have the benefit of Wyckoff or anything before that. Let's say all we looked at was that. So here's how this works. You would enter your long. You would look to close your long. You'd re-enter it, effectively break even, close your long. Re-enter it again. So I'm showing you where they're crossing. Close your long, re-enter your long, effectively break even, and finally closing your long all the way out at, and we can show you where price was at the time, but ultimately taking profit at about $14,000. So this is something that's very slow, very tedious. This is like the Titanic. This is giving you a nice macro view of what's happening, but it also gives you a very early warning system of what is about to happen. And what happened next was the following bear market. So this told you to get out right around $14,000 based on the price action. And really, you were not supposed to get back in until later on down in the $3,000 to $4,000 range. So it effectively it had you sitting on your hands. It's very powerful, and it's something that I think should not be faded. Now, at the same token, this was not as powerful as Wyckoff, in my opinion. Wyckoff told you to get in between $200 and $500 for Bitcoin at the lows. It told you to get out very close to $20,000. It was between $18,000 and $20,000. That is extremely powerful if you know what you're looking for. But let's say you just want kind of the easy button. This is about as good as it gets. If I throw on price action, it almost muddies it to where it's hard to keep up with what's going on. But let's bring it back to the most recent bull market. Again, I'm going to turn off the candles so you can just see how this behaved, the indicator itself, the Ichimoku indicator. We had an initial cross down at about $6,000 or $7,000, a couple cross, recross, just like we saw last bear market, effectively getting you out then back in, out back in. So you initially entered back around $6,000 or $7,000, and you did not finally exit until $54,000. Now here's what's very interesting. Wyckoff also told you to get out up here. This was a very, and I have videos on this and everything, but the Wyckoff distribution showed up really clearly right in here, told you to get out. Wyckoff did not tell us to get back in here. It wasn't a thing. But what did? The Ichimoku Cloud system that I'm showing you right now. The Ichimoku Cloud system told you to re-enter down here at the lows, 35,000 or so, and then to cut it all around $60,000. So the bulk of this move was seen by Ichimoku, but was not seen by my Wyckoff, kind of traditional Wyckoff indicator stuff. So I got to get, credit where credit's due. This was a very impressive signal that Ichimoku gave to be able to forewarn people that, hey, this is probably going to the upside, and then go ahead and get out here. And everybody who's been watching this has just been sitting on their hands. Now, just like on the way up in bull markets, the same thing happens on the way down. There is the occasional debate, but hopefully you get out close to break even. I don't really trade this. I use this as a tool layered with other things. So I think it's just something to keep your eye on. It's not something to like really trade super hard and fast. I don't believe in that, but I am watching to see what happens down in here. Now, remember, we were just talking about all these different patterns and indicators and this and that. What happens should this, say, break to the upside? With the fast moving average breaking the slow moving average, and then now, both of those moving averages are going up. We're checking these boxes. We're checking those boxes. You understand what I'm saying? Like, we're building a very strong foundation to be able to say, this is the bear market bottom. Now that's what we're aspiring to be able to say. That we can't say that yet, but we're at least building the blueprint of what that might look like. And I like get tingly just thinking about it. So that was number 3. Last thing, number 4, the fourth thing that I'm going to keep an eye on is where are we with respect to the halving? So Bitcoin, if you don't already know this already, operates on a halving cycle. What that means is roughly every 4 years, the number of Bitcoins issued per day is cut in half. Okay. And the easiest way to think about what that does to price, even if you didn't have a chart pulled up right in front of you, the thing to think about is what happens if the like the world's favorite Air Jordan shoe, suddenly one of the biggest factory burned down and only half are made per year going forward. Well, obviously everyone thinks, oh, well, if demand was a certain amount already and the supply is cut in half, well, demand's going to go up, the price is going to go up. That's just like normal thinking. So if Bitcoin's demand doesn't even grow, if it just stays the same, if that's like kind of the argument that the usage of Bitcoin is effectively the same, but the number of Bitcoin being released is cut in half at a certain date, then one might predict that the price would go up. And if we look back through history, that's exactly what's happened. These lines, these vertical lines are the halvings. And right here, I've put where the next halving is expected to be. And we'll talk about that in a minute. But all right now I want you to focus on is how each halving leads to a bull run. Each halving leads to a bull run. We have a halving, we have a bull run. Okay, so it leads one to at least postulate, perhaps the next halving will be followed by a bull run, right? That doesn't seem too crazy to see. We're 3 for 3, perhaps we'll be 4 for 4 rather. So here's what's interesting. You can go to buybitcoinworldwide.com/halving, and they have this nice little visual of a clock. Right now, the ETA for the halving is March 28th, 2024, and that's what I have right here. At least I tried to get close to it. So I have it somewhere in March. But the idea is, okay, so if we know that we're breaking up like we outlined before, and we're also getting closer and closer to the halving, it would also add to our argument that, hey, maybe the bear market bottom is behind us. Maybe we have actually bottomed and it's kind of up only from here. Now, I say up only with a little bit of like vomit in my mouth, because what I don't want people to do is do like what people did back in 2019, into the summer of 2019, where it did go up only to rally back to the downside. And the people who were long and strong at the breakout ended up puking their positions and then sitting out the actual move, which followed after the halving. So what I'm trying to point out is, even if this does break up to the upside right here, yeah, things were upward and exciting too, about this same distance from the halving. In fact, we can measure it. Back when things broke up, we were about 400 days from the next halving. Now, we already looked over here that we're 450 days. So that means we're kind of on track to do all this trash. So the worst thing that can happen is if we break up and then come back down only to moon again. And, you bought here and you sold there thinking it was all a scam, and you missed the entire next all-time high. So I'm just trying to get these ideas across. I'm trying to help you understand how things typically go, and so that you are able to trade to your maximum ability and you're not shaken out by big scary moves that inevitably will happen. It's not like you can see everything coming. All you can do is try to plan your best, make a plan, stick to the plan, and just hope that the plan works. I hope you're on the right side of it all. All right, guys, I hope that was all helpful. Be sure to like and sub. I appreciate you all. Be sure to join me on my live streams, twitch.tv/CryptoJack. Also, be sure to follow me on Twitter, where I am at CryptoJackLive, and I think that'll do it. Thank you, guys. Love you all. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. I'm not your bear guy telling you to sell.